Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, March 4th, 2021. This will be the second video of the day. Just wanted to follow up. First one took a while to get out, had some internet issues, but internet just came back online. Comcast was out for their Xfinity service was out for a couple hours. Back up now, so I want to do one more video and just share my thoughts and, of course, trade ideas. That's what it's all about. All right, this is SPY. SPY has now taken out the recent low. Right here, you can see there was that low from back on Friday the 26th, mentioned the video. So it's joined QQQ now and breaking the recent lows. We'll look at QQQ. Small caps will follow, mid caps will follow. If I have time, I'll get to those in the video. But QQQ, I'm liking what I see so far as being short. What that is we broke down. There's a well-defined sideways trading range, really defined by these yellow lines, the yellow one up top and the yellow one on the bottom. And we took that out ever so slightly at the close yesterday, but it was a breakdown nonetheless. And then this morning, here we'll go to a 1-minute chart. You can see, so when we look what happened today, that level was right about here. So we broke down yesterday somewhere in here, but you can see this resistance on a 1-minute chart. Bounce after the breakdown there, and rallied back up. Tried to get back above it today, and again I'm zooming in. This is a 1-minute chart showing pretty much where that yellow line is. Tried to get back there today, failed. So once we broke it down, back test, failure, back test, failure, back test, failure, back test, failure, and went a little bit higher. As I said in the video this morning, give it a little bit of room, and then boom, pretty impulsive rejection. So we're not down big. QQQ is down a respectable 2% right now. You can see it up in the corner, 1.8. Nothing big at all. Compared to historic moves where you can see the Qs go anywhere from 3 to sometimes 5% in a day. And SPY is actually down less, but I'm doing the video now just to get it out to you guys and share my thoughts. I've talked about for a while there. There's a lot of just a very large amount of indicators that have historically been very reliable. Things I've shared here for months now: put to call ratios, various put to call ratios, volatility indexes such as the VIX, which I'll get to here in a second, sentiment indexes or sentiment surveys like the AAII bull bear spread, things like that. And of course, most importantly, the technical posture of the indexes. What I mean by that, I'll just quickly go to the weekly chart. Big divergences building, particularly in QQQ. SPY, we pretty much flattened out here. A little divergence right there at the high on this weekly chart of SPY. But QQQ, and again, tech sectors, the market for the most part. Big divergence, trendline break. That was last week's clear sell signal with that solid red close. That's what you want to see. Solid close below the primary uptrend line off the March lows. Same trend line I was focused on the daily. And so far, now we're getting closer to Friday 4 p.m. I know today is only Thursday, but we've got about 2.5 hours to go in today's trading session, and then of course tomorrow. But the lower we go, as I like to say, the redder the better on a breakdown. And that was a big red candle last week, and so far we're following up with a pretty good red candle today. And again, it all ties into what's going on in the shorter term time frame, these 60-minute charts. You can see here is a 60-minute chart of QQQ. Okay, couple things to point out. In the first post I made today, somebody mentioned there's some positive divergence on the futures on the 60-minute charts. Now, I don't see that. I saw some potential divergence on ES, but I think that's been taken out now. QQQ has it here, but where we're at, and this is where you always have to pick a team or pick a side in trading. If you're not sure, do nothing. You don't have to force a trade, but at almost any point in time, I can sit there and make a bullish or a bearish case on a security. So I have to decide which potential bullish signals to ignore and which ones to act on. So I will say this: these are all levels I've had on this 60-minute chart for a while. We're at or just a hair below, which is fine if it's going to be a momentum fueled overshoot. That 305.31 support / target on the 60-minute. But the bigger picture is we had a breakdown of this trend line. I mean, we first broke this one here, 60-minute back test, went on, put in a divergent high. It was a divergent high here. We made a marginal new high, and we've been stair-stepping lower since. So there it is. There is the divergence. There is a potential. If they can ramp this market up. And what it boils down to, a lot of folks will sit there and cry foul if they're short, and then the market reverses and ramps up hard, and they say, well, the PPT did it, the plunge protection team. They're the ones that came in and bought. They do have the government working group for market. They'll come in and save the market in extreme instances, but I don't believe they come in and step in every time there's a 2% drop in the market. And what it boils down to, where I'm going with that is, if you have just more dry powder, it's all about, at the end of the day, stocks go up. Any security or just about anything out there that you buy or sell goes up when there's more buyers than sellers, and it goes down when there's more sellers than buyers. So if there's a lot of willing buyers on the sidelines that want to step in and they want to buy Apple because it's down another 1.6 today after falling as much as it has, and they want to buy Tesla because it's down 6% right now, that's going to drive the market up. However, if the buyers have dried up, we've had a heck of a rally, and so metaphorically speaking, not literally, if the last bull has bought his or her share, in other words, people that were on the sidelines and want to be in the market, and they're fully invested, then that's when a rally ends, because there's no one left to buy, and you have a lot of people that are already all in. And so what happens? A couple things happen. Let's just go talk about that. That's how a way I view technical analysis. This was a well-watched level. This was even a pretty big level there, 314. And so there's a lot of stops below. I always said, if support's at 314, I'm going to give it a little room if I was bullish and long on a stop. And so I suspected that there were a lot of stops set just below the top of below the bottom of this recent trading range, and that's where you get these sharp drops once they break. Again, nothing big. Only down 1.74% right now, but by all accounts, it's another check mark for the short case or the bearish case today, and increases the odds that we're going to move on down to my 297 target. And if they can't stick save it, in other words, if the buyers can't come in here now and ramp it back up, back into that price channel, and then foil this breakdown, make it a whipsaw signal, the most important today is how we close. Do we close well below that level? And if so, that's going to be bearish and increase the odds that tomorrow, Friday, we go down again. But if they can rally it back up, and it's not a huge thing for them to do, if they can, from where we're at right now, the bottom of that candle, I'm trying to grab around the 304 level. If they rally it back up, then that's only about a 2% turnaround. QQQ does that on an almost daily basis lately, especially when volatility is high. So there it is. It's anybody's game. But again, I see overwhelming evidence, in my opinion, or strong enough evidence to be fairly aggressively short, especially after yesterday's breakdown and the follow through today. And again, several failed. Excuse me, frog in my throat. Several failed attempts to get back up there. Again, daily chart, you're not going to see each run at. That's where you go down to the 1 minute chart, and so boom, 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 there it was. Okay, that's it. So I've made my thoughts pretty clear on where we're going. And let me say this. I also think that we may be at, and that's why I want to do the video, what I call the POR, point of recognition. It's a term I made up. When the charts are stacked bullish or bearish, I'm waiting for a big move, a relatively big turn in the market, a big rally or big correction. And that correction usually at inflection points. That's what I'm referring to. What's an inflection point? Well, when you're going down, when the trend's a strong downtrend, inflection point is going to be a reversal. So a POR right here would be a point where the majority of traders realize that it's no longer a counter trend bounce, rather the beginning of a new uptrend. And likewise, I think that's what's going on here. So what I mean by that is, all along you've had some little corrections here. This one was a pretty swift drop, and this one was kind of a more steady grind down. But you've had these pullbacks along the way, and this is what people have gotten used to. and buy the dips, buy the dips, buy the dips. And I always say I have my own set of yogiisms in the market. One of them is dip buying works great until it doesn't, and that's where the point of recognition sets in. So for a while here, these little dips of about just 3-4% were being bought up pretty aggressively and went to the next high. So what happened is, well, we dropped about 3.5% where we did before. They didn't buy it. Then we dropped again another, well, so far at that point we're down 8%, and they bought it, and they bought it, and they bought it. But what happened is this is showing the supply and demand dynamics in the market right here. If there were a lot more buyers in the market, a lot more dry powder, we would have broken up and above this trading range and continued on to the next high. What happened is the sellers won. And when I say that again, I'm just speaking, metaphor, or you're trying to, say that there are more sellers in the market, more longs taking profit. And what happens when you hit that level, like I said, a lot of stops were probably set just below that. So you start to get impulsive selling. And that's my expectation. I think today, and I answered this in the under the previous post in the comment section, somebody said, hey, looks like support about 305 on QQQ. Absolutely. If you go back to that chart or any of the charts I posted in recent weeks, you'll see I have a line right here, and that's right at 305. That's these lows, reaction lows from December. And if you look at the previous chart I posted, here, I'll show you that. Okay, right here this morning on that additional sell signals in QQQ, and you can see it right here that you have the arrows bouncing right to that level. There's that 305 level, and that's about where I expect the bounce off 297 to go. However, it is support. So, okay, Randy, well, why don't are you going to game a bounce off that level? No. My answer was no. Somebody said, yeah, it looks like we have minor support there. And I said, I think we'll probably smash on through there. I think any reaction will be fleeting, if at all. And, in other words, a minor reaction based on where we are with everything. In other words, the point of recognition is where people realize, guess what? This isn't another buy the dip opportunity. Something's changed here. And then, therefore, I think we'll, by the end of the day, probably close down here at around that, on around the 297 target, hit it there today. And if not today, tomorrow, and that's another 2% downside. So that would put the Qs down a good 3.5-4% today if we hit that 297 target. So that's that. SPY. I'll have to play around with this a little bit. I'm going to give I'm going to modify. I've given you targets already. That's the wrong tool. Let's get rid of that, delete that, and do a horizontal line right about here. Okay, give or take about this level, 370.45. That's my new first target. Again, assuming that by the time I finish this video or get it out to you, we haven't whipped back above those recent lows, particularly on QQQ, and then this proves to be one big whipsaw signal. All right, let's go to the 60-minute chart. Somebody mentioned positive divergence. There is on SPY right here. Hardly, but it's still there. Positive divergence on the RSI, but not the PPO. PPO is making a lower low. Although if it can turn up here, it will. You'll have this, and that's your divergence. Divergence simply prices making lower lows, and the indicators making either equal or higher lows. So there is the potential in the charts, and SPY is coming up on this support right here, about 374. There is a potential there for these divergences to play out. They're also I mentioned that on ES, it would be taken out. You can see this. If we go any lower, we're just barely holding on to the divergence on ES. These are the S&P 500 E-mini futures. So here's the thing. As I'm doing this video right now, it's 1:36 p.m. as I speak. We're either going to reverse soon, and that could set the stage for a rally. And should these divergences play out, most certainly could give us that bear trap scenario where today's breakdown proves to be a false breakdown or a whipsaw, and shorts get squeezed out. They realize they're wrong. So if it's going to happen, it needs to happen soon. I don't favor it, but you certainly have to respect it because bear traps are pretty powerful. So That could be the catalyst for the next leg up. Just like back here, remember we had broken down. We had a nice sell signal in SPY, not confirmed by QQQ, however. Breakdown back test, but then we put in a pretty sharp divergent low on the 60-minute chart, and that was a catalyst for this next leg up to new highs right there. So this is what I'm watching, and also on NQ, no divergence there. You can see we're making lower lows on the indicators, even though we have lower lows on prices, but that's not negative divergence. There's no divergence. Divergence means, by definition, one thing's going one way and the other's going the other way. They're diverging from each other. All right, so that's NQ, no divergence. If it had it, I'd be a little more concerned. QQQ does have potential divergence, but I call it potential. Potential means the indicator, these are momentum indicators. The PPO is a momentum indicator, and it is pointing lower, saying the momentum is down. And it can keep going down, 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 and then you no longer have divergence. So it needs to turn up, and it needs to do it very soon, or the divergence will be taken out. And because of everything that I've talked about in today's previous video and the post I made on the homepage, and everything else in recent weeks, extreme put to call, sentiment, technical posture of the indexes, I'm overriding those potential bullish developments or choosing to dismiss or ignore those. I'm acknowledging them that they're there. I'm showing you guys they're there, but I'm going to hold out, and I think they will fail to materialize. And if they do materialize, you know what? I can always start to unwind short positions if and as we start to rally and I see this, breakdown fail. And a lot of my average costs on this was anywhere from the breakdown and to the back test here. So easily for a swing trade, I can allow a stop above the recent trading range, even up there. And again, everybody's different. If you're going for this target down here, this current final target, 267.50, you have to take your average cost. Where were you in on average? Here? Were you in here? Were you in here? And then calculate your risk reward. How much reward if that target's hit, and then you can then determine how much money you want to risk with a stop. Never risk $1 of loss for $1 of profit. You can do that, but you got to bat close to 1,000, or at least way better than 500 to be successful. That means over half your trades have to pan out if you're using the 1-to-1 risk reward ratio. Okay, so at the end of the day, still anybody's game. I spent that bulk of that last video showing you many big blue chips at support levels where the buyers should step in. Now, one thing I want to add here, and this is important, I think, based on all the extremes that have preceded major drops, put call ratios, sentiment, all that other stuff, there is the possibility, and I know nobody sees it right now. I listen, talk. I mean, I'm sure, okay, I'm not literally the only person out there that sees this, but I think the potential is there for a big drop, mini crash in the market, something that catches everybody off guard. They just can't understand. Everything's been so good. The news flow lately, the vaccines are working better than expected. They're getting out there. Planes are flying. Crude oil is shooting up. Commodities. But because of the conditions in the market, I just want you to be aware that we could see a very strong drop, a drop that cuts right through my 297, 283, maybe takes us all the way down there. It's hard to say. And again, I'm just outlining the potential. If those drop, if it's going to happen, it tends to happen from market conditions like we have and have had now for the last few weeks. So I'm not saying that is definitely going to happen, but it's much more a possibility now than at most points in time. How do you trade that? How do you play that? Well, a trailing stop is a great thing. If you've got in some shorts at a pretty good level, and instead of trying to hit a single or a double or a triple, going for this target or that one, you want to hit a home run or a grand slam. Give yourself a comfortable stop. And it depends, 5-6%, whatever you can tolerate. The higher your stop loss, if it's a trailing stop, the less of a chance you're going to get shaken out if we do, have that sharp drop and one of these counter trend moves. Because even in a strong drop, here was a drop into the COVID lows back here. Let me zoom back right here. And you can see this was a sharp counter trend rally, right there. That was measured, 11% right there. But even just the daily swings right there, there's 6.35. So I can say this, volatility expands during corrections. And if you're running a 1% stop loss on anything you're shorting right now, you're probably, and you're shooting for a double digit gain, 10% or better, you're probably going to get stopped out along the way. So, all right, so that's hopefully that makes sense. And everyone has to find their comfort level, and that also relates to your position size. If you're going to use a big stop, that you might say, oh, wow, if the stop's hit, I'm going to lose, X amount. Then just swing down a smaller position size. It allows you to stay in the trade without getting shaken out. So, all right, those are my thoughts, and then other ways to make money. I've given an analysis on a lot of stocks. You can most certainly trade individual stocks. I've given many setups there. But I think it's right now easy. When you have these broad-based sell-offs, the indexes, almost everything gets sold off. And so, and with the indexes, one thing I like about trading them at times is you can leverage up because you're more diversified than a single individual stock. You get caught on the wrong side of a short or a long on GameStop or even Tesla, it's going to hurt. But on the wrong side of the S&P 500 or the Nasdaq 100, you have 100 or 500 other stocks in there that are going to smooth things out. So that's that. And VXX is one option. Nice strong divergence. I've mentioned this one. And UVXY is another VIX ETN. It's up 7% today. Same thing, big positive divergence. So this is another potential trade idea to capitalize on a correction if we're going to have more downside, that is. And of course, look at the VIX itself. As I mentioned in several recent weeks, it's been pulling back to support here. This is a great support level, and we recently moved off there, and we did so with positive divergence. See down here, these indicators, positive divergence. Equal lows, but higher lows on the indicators. And if we get a nice sell-off, the VIX could really take off here. We've had a couple nice moves, and don't underestimate how far and fast the VIX can go during corrections. So that's the VIX. VXN, I've never been able to find a volatility, an ETF or ETN that tracks the VXN, but that's the NASDAQ Volatility Index, and there's another one here as well. But anyways, let me just show you. There's the 25, 55 support. It shows the NASDAQ has been, where a lot of the selling has been lately, and there's another one, NASDAQ Volatility Index, VOLQ. There it is. Same thing, bouncing off there. But again, the only way to trade the NASDAQ Volatility Index, to the best of my knowledge, is via futures or options on those futures. If that, I'm not even sure. I've never traded. I've only traded the regular VIX, never the NASDAQ Volatility Index. But just want to point out it's indicative of what's going on. Okay. All right. So this loops me back to the NASDAQ 100 here, the futures, and we've now hit my 12,409 or 40. Actually, it's rounded up. That's 12,410 right there. That target has now been hit. That puts us at support. But again, I think I showed the arrows. I think any reaction here will be fleeting if anything. And again, this was the support level right here, the support zone that was taken out, back tested twice this morning, and the bulls failed to regain that level, at least on a solid 60-minute close. And so boom, there we are. And I think, like I said, I'll get this video out to you guys today, but I think we'll probably continue down today and or tomorrow if we don't hit my next target on QQQ. And although I want to just stick to the markets on that one, nothing's changed on my outlook on CL. Again, if this is the point of recognition where the bulls realize, the stock market is correcting, crude will play a very swift game of catch up to the downside. So basically, we just have a back test of the trend line. Broke down, as mentioned yesterday, we put in this, or recently, this small divergent low, kicked back up. Doing so only extended the negative divergence that was already in place, as I have drawn down here. So we have small divergence within a scope of much larger divergence. So small divergence, small rally, gets a back test, and then boom. And yes, the energy stocks will finally go down with the market. should this play out, which I still suspect it will. Remember, so far lately it's been the tech. That's why I was hyper focused on tech. But my theory here, and I've seen it before, tech breaks, the market breaks. So the financials and energy and everything else that's been holding up lately will get the memo, and it's called forced selling. Live by the indexes, die by the indexes, being big components of the indexes. uh, when the margin calls start and the hedge funds start to, institutions start to hedge up, or sell longs, or buy put protection, things like that, stops are hit, then everything gets sold. That's what we call broad-based sell-off, and that's why I expect those other, blue chips that have been hanging in there to also start going down soon as well.